Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Wednesday. The Philippine economy will likely grow slower than expected this year. That's according to the ASEAN Plus 3 Macroeconomic Research Office.
Billionaire and former Senator Manny Villar gets the broadcast frequencies formerly held by Abs-Cbn.
The country slumps to a historic low in a global corruption index.
And the local wars will revert to full-day trading starting next week. We begin our broadcast with the ASEAN Plus 3 Macroeconomic Research, or AMRO, trimming its growth forecast for the Philippines this year.
Now, AMRO expects GDP to expand at 6.2%. That's lower than the 6.7% projection it gave back in October last year. This latest outlook is also lower than the government's growth target of 7 to 9% for 2022. AMRO says the weakness lies in the country's services sector, saying that the economy may take a beating if tighter restrictions will be imposed. The research office says the government needs to ramp up its vaccination program further to keep the economy open for longer and to support the services sector. For 2021, AMRO says the economy likely grew by 4.9%, lower than the government's target of 5 to 5.5%. 2021 GDP figures will be released tomorrow. Meanwhile, agricultural output in the fourth quarter of 2021 grew by 0.6%. That's a reversal from the contraction of 3.8% recorded in the same period in 2020. Now, billionaire and former Senator Manny Villar has taken over the broadcast frequencies formerly held by ABS-CBN. The NTC confirmed late last night that Villar's Advanced Media Broadcasting System, or AMBS, has been awarded provisional authority to operate ABS-CBN's digital TV frequency. This comes almost 2 years after the Lopez-led media titan was forced to go off-air after failing to obtain a congressional franchise. The regulator clarified that the permit is, quote, for simulcast purposes only and will be effective until the analog shut-off in 2023. The NTC says Villar has been waiting for an available digital TV frequency for 15 years. Now, after becoming the first applicant for an authority to install, operate, and maintain a digital TV in Metro Manila, this will effectively give the Villar Group control over the frequencies, which is a scarce public asset, while blocking future attempts by ABS-CBN to regain use of the spectrum. All right, Dan, this news broke last night, ushered us to our sleep, and then we woke up to more details on this one. Again, Villar to take over ABS-CBN frequencies. How is this going to affect market movement? Which stocks should we be looking out for?
All right, well, very interestingly, Jess, great question there. Villar does not have any listed company right now for media, nor does it even have a Conglo listed with other holdings. But it's interesting, nevertheless, to take a look at the other stocks he owns. Of course, VLL, that's Vista Land. He has also done 2 IPOs recently. That is All Home and All Day. Plus, there is a Vista Land REIT in the works this year. So, you know, gobbling up from properties to supermarkets all the way to media. Take a look at some Villar stocks here. So Vista Land is the biggest listed one, let's say, and that has jumped up by 1.44% since the close last night. All Day is also up 1.7%, whereas All Home is unchanged at 8 pesos and 70 centavos, which is a little bit far from its IPO price. Now, how about ABS-CBN? How is the stock responding to this major sell-off this morning? Just down by 7.5%. Of course, the stock, I'll just pull out the 5-year chart for you so you can see, you know, how this has just been, slumping since 2018, since those things happened. And of course, it has been trading sideways since then. And again, a massive sell-off this morning on that stock, which everyone is watching out for today. What is the future of ABS-CBN going to be looking like with this development? Now, let's zoom out On our local index, yesterday we had bucked this Asia sell-off, but now you're seeing quite a pullback. We're down by 0.6%. Recall yesterday there were bets of us going to alert level 2 coming on February after, of course, the longest January ever. Our reproduction rate is below 1 according to Octa, and Health Secretary Duque yesterday said the capital region ready for more relaxed restrictions by next month. But of course, a lot of people still very cautious here, and it does not seem to be the case that we are continuing with that uptrend this morning. And of course, you did mention, and in our headlines, we are back to 5-hour trading. That's going to be from February 2. We will be closing at 3 p.m. At least the Philippine Stock Exchange will be closing at 3 p.m. So more opportunities to trade there. Quick check on the movers of this morning. We are 30 minutes into trade. We have ICTSI leading the charge, Security Bank, and Robinson's Retail as well. So at least these retail, stocks which had been rallying yesterday, still holding forth here, together with Wilcon as well. Although Jollibee, one of our biggest movers yesterday on those reopening stories, pulling back. That's down by 1.7%. And finally, just a couple of stocks I wanted to watch out for. These are the newbies here. You've got SPNet, that's Solar Philippines, had up by 3%, close to 3%. That's after they've already risen yesterday by 3.1%. And, it's now double or even more than double its IPO price, Jess. That's after they've said yesterday they're firming up their plans for the development of a 10 gigawatt worth of solar projects. That is almost 10 times our entire Philippines grid-connected solar capacity as of last year. And finally, another stock on the growth trajectory, that's Nico Telecom, that's up by 1.2%. They are targeting to increase subscribers to 12 million people this year. They say that's actually a conservative goal considering that they hit 5 million subscribers in just 9 months. So that is Nico Telecom trading at 5 pesos and 27 centavos. We are just a day away, Jess, from finding out how the economy fared for the whole of last year. Economists believe growth might have moderated in the last quarter, but still enough to realize the government's full-year GDP target.
Now, should that be the case, will the rebound story persist this year? To find out more about his outlook, we have on Businessworld Live Robert Dan Rosas, Chief Economist over at Security Bank. Good morning, Sir Dan. Thank you for joining us.
Morning. Good morning. Nice to see you guys.
Nice to see you again, sir. Of course, median estimate here from The Economist at 6.5%, but yours is a tad bit slower for the fourth quarter at 5.8%. What pulled back growth?
Well, it's not really slow. No, I mean there's base effects coming in. Also, well, from a non-seasonally adjusted basis, no, quarter on quarter, that's already plus 15% growth. No? So the trajectory is actually showing that the fourth quarter growth is actually quite strong, taking off from the surprise growth that we saw in the third quarter.
Sir, agri-output, there was a slight uptick in the fourth quarter. Does this mean anything to you, considering that it was the Odette quarter, and was that actually, does it mean anything, or is this just again what you've mentioned, base effects here? We had a hard year last year, and this growth is not necessarily something beneficial.
Well, we do factor in Odette's effect towards the agricultural growth. No? It might have been suppressed, no? But considering like what you said, despite Odette, we still managed to eke out a slight positive growth in terms of agricultural output. Output from that sector has been negative since the third quarter and the second quarter, I guess. No? So at least it's a very good number, considering that it's a leading indicator as well to one of the largest sectors in our economy. So Odette might have suppressed the sector's growth after the harvest season, I would say. So it didn't have as much impact as it would have had it been in the midst of the growing season, or even during the planting season.
Okay.
So that's I think that's a good number.
Okay, sir, what about the impact on inflation here, especially as you mentioned it might not have been the impact during the December season, but a lot are saying that the impact on inflation might be felt in this quarter.
That's true. No, we are expecting that some impact might be permeating into the price pressures upward now. Offsetting that is a traditionally slow consumption quarter, no, and a slow consumption month, at least after the holiday season. No? So likely it's going to get read into the January and February inflation numbers. Adding to that is what we are seeing in terms of global oil prices, no? And as well as food prices in general remaining elevated. No? So what that means is any type of supply snag means that inflationary pressures remain susceptible to upward movements. No? So we'll likely be seeing some pressure in the aftermath of Odette after, well, for this month at least.
Sir, how's that also going to factor in when it comes to growth for 2022? Do we expect still a spillover here? Of course, 2021 more or less you have economists projecting a turnaround from the contraction that we had in 2020. Do we expect recovery to stall for 2022, especially as well with the emergence of new variants?
Well, our baseline actually incorporates the possibility of newer variants emerging. So recovery could likely be better this year. No? Our estimate is around 6.5% year-on-year growth. No? That's the baseline. But like you mentioned, no, there's still the risk of newer variants emerging. So the key risk actually is a slowdown in mobility. And that's what we saw in during Omicron. No? So that exacerbates the traditional slowdown after the holiday spending. No? So first quarter this year might likely take a hit, but we do expect a quicker recovery compared with Delta. For context, during Delta, we only had, our hospital, at least our hospital capacity was pushing 90 to 95%. Now, compare that to now, at the peak of Omicron, we were only at 51% on average in terms of capacity. So that compelled the authorities to keep the economy as wide open as possible, as long as the hospital situation allows. And that could be because of improved vaccination rate, which wasn't present during Delta. So a quicker turnaround is expected after Omicron passes. But the risk, of course, could be other variants or newer variants that might prove to be more infectious and worse than Omicron. So that needs to be factored in the growth story this year. But overall, I think we are in a better position to manage the health situation. So that lends credence to positive sentiment. And positive sentiment leads to better mobility, and better mobility leads to higher private consumption. So private consumption could be the main driver this year for the recovery of the economy.
Okay, sir, so kasama na sa forecast nyo yung downside risks of possible variants. What about elections? Presidential candidates have already shared their economic platforms, at least, preliminary. Are you beginning to craft scenarios? Is there a general, need to take into consideration best case, worst case scenarios should these economic policies that they're touting come into play?
Well, naman in every election cycle, a lot of economic plans tend to take off from the good outcomes that were done in the previous administration. And we're seeing the same thing this year. Some of the good policies seem to be getting snapped up by the candidates. No? So that includes, for example, the attracting more foreign direct investments. So that's good in the longer term growth story. However, yeah, something I think the risk is always political instability after an election cycle. No? Right now, that risk is still low, given the conduct of the campaign so far. No, and during an election year, growth averages around 6.2% versus around 5.1% during non-election years, no, excluding 2020. So we're expecting this year to be the same, no, despite the fact that we are in the middle of a pandemic.
Now, talking about elections here, one thing we have to be keeping an eye on, of course, Sir Dan, would have to be the power supply come May. That, of course, is coming under pressure here. Not to mention, of course, you have Indonesia, at least for now, putting a ban here on coal exports. How is that going to affect our narrative for next year, and how do you expect that to play out?
Well, the prime risks right now are higher commodity prices in general, led by oil. It could be exacerbated if war does break out between Russia and Ukraine. That will drive commodity prices higher, led by oil. So that's one of the larger risks that we have to watch out for. But we do expect energy prices to remain elevated this year, given that most economies are recovering. It could remain elevated, but what that means is actually going back to the pre-pandemic levels already. We should expect less of the spikes similar to 2021. But like I said, the prices will likely be at the current elevated levels for most of the year. So that's adding on to the inflationary pressure globally and also locally.
Okay, sir, speaking of inflation pressures globally, we're also waiting on the US Fed on what their policy is going to be. What do you feel about that? Too fast, too soon in terms of unwinding? To what extent will you say the BSP needs to catch up when growth reaches what number specifically, when inflation reaches what number? And also on the back of that, sir, can you comment on how the Philippines is going to fare compared to the rest of Asia, compared to global growth?
Okay, for the Fed, I think market is expecting around 4 to 5 rate hikes this year from the Fed. There is a high chance that the Fed rate hike could begin in March. Also, based on signals coming in from the US Fed already. Also, the two main indicators that the Fed watches out for, namely the labor market and inflation, both have been running hot. Labor market in particular could recover fast after the Omicron wave, so that could lead to a wage-induced inflation in the US. So the Fed really has no choice but to rate hikes in order to rein in inflation. And that much we expected once Fed Chair Powell already said that they have to retire the transitory, because what we're seeing right now is that it's not transitory. And relative to oil prices as well, we're expecting prices in the US to remain sticky. So that validates the need for the Fed to hike rates sooner than expected, like in March. Now, locally, it doesn't necessarily mean that we have to follow suit, but we have to be mindful of volatility that could emanate from the Fed rate hike. So likely we might see volatility in the local space coming from GS rates and also the FX space. But I think we have ample monetary policy controls in place, so that means the volatility can be managed locally. So it doesn't necessarily mean that the BSP will follow suit, but what we are watching out for locally is stability in growth in the second half. Now, if there is stability in growth in the second half, that means demand pull inflation. the other kind of inflation, because lately inflation locally is mostly cost push. So demand pull inflation might become more pronounced in the second half. What that means is it could lead to secondary effects. So the BSP is mindful of that. We do think there is a possibility that they could hike rates in the second half as a form of a preemptive measure, because it takes around 8 months for policy moves to affect the economy.
Okay, very interesting points there. So medyo malayo pa tayo from making those decisions as we wait for the prospects of what's going to be happening in the second half of the year. Possibility to be preemptive, but still some space to not necessarily keep in step with the Fed if they do hike rates earlier than expected. Thank you so much for those insights, Robert Dan Ross, Chief Economist of Security Bank.
Thank you.
Now, coming right up, the country falls to a historic low in Transparency International's Global Corruption Index.
More of that and other stories when Businessworld Live returns. Stay with us.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Dani Laurel. The Philippines slumped to an historic low in a global corruption index released by Transparency International.
This after the country dropped 2 spots to 117th out of 180 countries and territories. The think tank noted what it described as a sharp decline in freedom of expression under the Duterte administration. They say this has made it difficult for citizens to call out corrupt activities. And because of this, the Philippines scored a record low of 33 points out of 100 in a scale that measures perceived levels of public sector corruption.
Now on to some COVID-19 updates. The Octa Research Group says Metro Manila has been downgraded to a high-risk category. That's after being classified with a severe outbreak last week. Professor Guido David notes that the 7-day average cases in the capital has dropped to around 6,000 from the over 15,000 a week ago. The reproduction number has also dropped below 1 and is now at 0.71 from last week's 2.06. David says they are expecting NCR to be at moderate risk by next week.
Now, latest studies show that the Omicron variant survives longer on plastic surfaces and on human skin. But health officials say this is not a cause for alarm. Mobile journalist Pamela Vasquez with the rest of the story.
The health department has detected cases of stealth Omicron or the BA.2 subvariant in the country. DOH Undersecretary Maria Rosario Vergere said the stealth Omicron is now predominant in most regions. But she stressed there's no significant difference between that one and the original Omicron variant, BA.1.
At kinakailangan pa rin po ng masusing pag-aaral dahil limitado pa rin naman ang ating mga obserbasyon na nakukuha dito.
A news report from Reuters said recent studies show that Omicron can survive longer than other variants, especially on plastics and skin. Though it has yet to be peer-reviewed, Japanese researchers say they found that the average survival time of Omicron is more than 193 hours or around 8 days, while average survival time of the said variant on skin samples such as cadavers lasted 21 hours. However, health experts say there's no cause for alarm. What's important is to strictly practice good hygiene.
For so long as malinis yung kamay natin, wala siyang paraan na tumalon para pumasok sa katawan natin.
At least 535 cases of Omicron have been confirmed in the Philippines. The UK Health Security Agency has designated the new Omicron variant BA.2 as a variant under investigation after it detected more than 400 cases in the country this year. Mobile journalist Pamela Vasquez, We Are One News.
Here are the other headlines we're keeping our eyes on. The Energy Department is inviting companies to supply 2,000 megawatts of renewable energy in the first round of its Green Energy Auction program. The agency says 1,400 megawatts will be supplied to Luzon, 400 megawatts to Visayas, and 200 megawatts to Mindanao. Renewable energy facilities are deemed eligible if they have been in operation and were built in compliance with the RE law. They must have no legal issues and have no power purchase agreements or power supply agreements with any distribution utility that may conflict with the agreed delivery dates.
Typhoon Odette has triggered a partial payout for the government worth 2.7 billion pesos from the catastrophe-linked bonds issued by the World Bank in 2019. The debt papers provide insurance protection for up to $75 million in losses from earthquakes and $150 million in damages from tropical cyclones. The coverage lasts until November 22nd, and with this recent payout, the government still has $97.5 million in coverage for typhoons, along with $75 million allotment for earthquakes.
Now this from the Philippine Star, Pag-ibig Fund's home loan releases surpassed 100 billion pesos for 2021. This is the highest amount ever released by the agency in a year. The amount includes home loans worth nearly 97.3 billion pesos and interim releases for house construction and renovation amounting to 3.5 billion pesos. This is about 58% higher than the 63.75 billion pesos released in 2020. Pag-ibig Fund Chief Ahmad Rizaldi Moti explained that the amount also financed the acquisition of more than 94,000 housing units for its members.
And Philippine Airlines will start serving flights to Tel Aviv, Israel, starting April. PAL spokesman Chelo Villaluna said the flag carrier is now working on the final arrangements on its scheduled flights to Israel. Last week, Transport Secretary Artugade met with Israeli ambassador to the Philippines, Ilan Flas, to discuss the ways to push PAL's Tel Aviv to Manila flights. Now, according to the Israeli embassy, there are over 30,000 Filipinos in Israel.
And that's a first look into the business day this Wednesday, January 26, 2022. I'm Jess De Los Santos.
And I'm Dani Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.